Hello and welcome back. We will continue our journey with income tax, and as I said in the previous lecture, we will look at the interest income and dividends in this lecture, because these are the two components of income tax which are significantly changed since the change of Finance Act. Because we used to gross up the interest income and dividends income in the previous Finance Act. Now, not only we need to take it just gross amount from the question, but there is other little bit complicated stuff with the income tax as well. With the interest and dividends. I want you to please open up the notes and please come to page 1 of your notes. Also, if you look at the board now, I've just written down a couple of questions here. Actually, it is just one single question. I've written down a question here. Please make sure you note down this question on your notebook. I'll just read out the question so that you can write down on your notebook and try to solve this question when I tell you to do so. But for now, please note down this question. It says Mr. A has £13,000 of property income and £6,000 of interest income. He also has £4,000 of dividends, whereas his friend Mr. B has £60,000 of employment income, £16,000 of interest income, and £6,000 of dividend. Now, in the notes it says Mr. A has bank interest and Mr. B has interest from loan stock of an unquoted company. Now, this was the question which I have written down here, and I have also read it out to you. So please make sure you pause the video and note down this question. After you have done that, look at the board now. Now, previously, what we needed to do was with interest income, we needed to take the net amount from the question and we needed to gross it up, because the 20% tax was already been deducted if you are retaking this exam. If you're taking it for the first time, forget about the previous, what used to happen. If you're taking it for the first time, what we need to do is we just need to pick up the interest income out of the question and put straight into our income tax pro forma, except for the one source of income, which is interest paid on the loan stock of a unquoted company. Alright. Another thing is that where the income tax bands are on your notes, page 1 of your notes, if you just look at your notes. After the personal allowance has been deducted, it shows you the banding. So taxable income starting rate band, then basic rate band and higher rate band. And after that it says additional rate band. Now for the starting rate band, now the starting rate band only applies to the savings income, and only where the first £5,000 falls, first 5,000 of taxable income of savings income falls within the £5,000. Now look at the board now. It says interest income, first £5,000 of taxable income of interest income. If it falls within the £5,000, then it will be 0%. Now, say for example, you had less of non-savings income and more of savings income, and that savings income falls within the first £5,000, then that first £5,000 will be subject to 0% rate, and that is starting rate band. Just the way I've shown you on the notes. It says that taxable income starting rate band, which is from £1 to £5,000, it is 20% on non-savings income on your notes, and 20% on 20% on non-savings income, whereas 0% for savings income. Now that 0% is only for savings income, because it is savings income starting rate band. All right. Forget about the dividends for now. I will tell you about the dividends in a minute. But as far as the starting rate band is concerned, starting rate band only applies to savings income, and in this case it is interest income. So starting rate band of £5,000 will apply only to savings income, and there will be 0% rate of tax on interest income if it is within the first £5,000 of taxable income. Right. So that's what it says on the notes. Interest income, if it first £5,000 of taxable income at the rate of 0%, And there is additional thing as well on top of that. Now this is not only this thing, we also get what is known as nil rate band now. Now what nil rate band is, if your income, it depends on the income, which your interest income, if it is coming under the basic rate band, higher rate band or additional rate band. Now if it is coming, if your savings income, taxable savings income coming under the basic rate band, then you will get £1,000 of nil rate band, which means first £1,000 excuse me, first £1,000 of savings income will be subject to 0% rate on top of what you get as starting rate band. They are two separate things, right? Now if your savings income is coming in the higher rate band, you will get £500 of nil rate band. So first £500 of savings income, if it is coming in the higher rate band, you will get 0% rate on first £500, and on top of that you will be according to the rates. And if you are an additional rate taxpayer, then you will not get any nil rate band, unfortunately, right? So you will get £1,000 of starting rate, £1,000 of nil rate band if your savings income is within the basic rate band, and if you are a basic rate band taxpayer. And if you are a higher rate band taxpayer, then you will get £500 of nil rate band. And if you are additional rate taxpayer, you do not have any nil rate band. Now there are two separate things, and you get two things. One is first £5,000. If your taxable savings income falls within first £5,000, then you will get 0% rate. Even if it is part of it, even part of the savings income falls within the first £5,000 of taxable income, then still you will get 0%. Say for example, if it is £3,000, you will get £3,000 at the rate of 0% up to £5,000. Right? Now additional thing which you get is nil rate band. It depends on if you are a basic rate band taxpayer, higher rate taxpayer, or additional rate taxpayer. You won't get any nil rate band in the additional rate. However, you will get £1,000 and £500 respectively for basic rate and the higher rate. That's for the interest income. Now please come to the dividends income. Previously what we used to do was we used to get the net amount of the dividends. However, now we get the gross amount of the dividends. So what we do is we just need to pick up the dividends amount from the question, and we just need to put into the pro forma whatever we have got into whatever we got in the question. But additionally, what we get is we get £5,000 of nil rate band, £5,000 of nil rate band in the dividend section. Now this £5,000 is for everyone. Now please look at your notes. In the starting rate band, it says 20% for non-savings, 0% for savings, and 0% for dividends for everyone, it says. Now if you have a pen with you, please write down nil rate band just next to 0% in the dividend section. Just write down nil rate band, because this 0% is a nil rate band and it is available to everyone. So nil rate band is for everyone. Even what does everyone means? Even if you are a basic rate taxpayer, you are higher rate taxpayer, or you are additional rate taxpayer, doesn't matter. Even if you are additional rate taxpayer, you will still get £5,000 of nil rate band in the dividend section. Say for example, if you are additional rate taxpayer, you had £150,000 of salary and you were getting some dividends as well, then whatever your dividends was, say for example £10,000 of dividends, you are higher rate taxpayer, aren't you? Still you will get £5,000 of nil rate band in the dividends. So first £5,000 of the dividends will be at the rate of 0%, and the excess will be subject to the rate given. Right? So that is our nil rate band of the dividends. So that's how we deal with the interest income and the dividends income. Now we will explain. I will explain these 2 points with the help of an example which I've just listed down here, and I assume that you have already written down on your notes. If you haven't written down on your notes, please make sure you pause the video and note down this example again. Let's look at the example now. It is Mr. A has £13,000 of property income. So I've already written down Mr. A and Mr. B. Now if you want to do this question on your own, just pause the video and do it yourself. If you don't want to do it, I would like you to do it, because even if you get it wrong, at least you would have tried it, so that is better. Please have a go at it, and let's see if you get it right. Excuse me. Now let's try this question now. It is Mr. A first. So Mr. A has a property income and interest income, and he has also got some dividends as well. So let's write down then non-savings income, and he's got some savings as well, and he's got some dividends. So I'll just write down the short form of all of these, because I just want to finish this question, to be fair. So first one is property income. So he's got some property income. So he's got some property income, and how much it is? It is £13,000. So he's got £13,000 worth of property income. He's also got interest of £6,000, and this interest is bank interest. In the notes it says it is bank interest. So we'll put £6,000 into the savings section, and he has got £4,000 of dividends as well. So go ahead and put the £4,000 into the dividend section. Excuse me. Now that is his total income, and we'll just make up the total here as well if you want. So total is how much? 13 plus 6, 23, I think total. £23,000 is total. Alright, then the next, £13,000 is property income, £6,000, sorry, it was interest income here, and £4,000 is dividends. So I'll write down the dividends here, it is £4,000. So that is interest, and that are dividends. Alright, so if I make up the total of this, it is £23,000, as you know. Let's just write it down in here, that is £23,000, that is total. Alright, so £13,000, £6,000 and £4,000, that is his total. What we need to do is we'll have to deduct the personal allowance out of it. So we'll deduct the personal allowance, which is £11,000. So our first preference is non-savings income. If any left, then we will deduct from savings income, and finally from dividend income. So we have just deducted from the non-savings income anyway. So the remaining amount is £2,000 here, £6,000 in the savings income, and the same amount, £4,000, into the dividends. All right. So that is our taxable income, if you know, because we do not have anything else given. So that is our taxable income. Now, if this is our taxable income, now which band am I coming in? Am I in the basic rate band, or higher rate band, or additional rate band? If you look at here, some of my income, excuse me, let me just erase this thing here. I'll just erase it. My £2,000 is coming into the starting rate band, right? So that is my non-savings income. Even if it is starting rate band, £2,000 will be subject to 20% anyway. Just look at your notes, just look at your tax table. I will just make sure I will read it again as well, if I'm doing it right, because this table will be given to you in the exam anyway, so you can look at it. So first, even if it is starting rate band, this is 20% non-savings income, so it will be 20%. However, if your savings income is coming into the starting rate band, even part of it is coming into the starting rate band, that will be 0%. So how much is it coming? 3,000, I think, is coming in the starting rate band. So 3,000 multiplied by 0%. So that will be 0, and that will be how much? 400? That will be 400. Now, why is 3,000 coming in the starting rate band? Because the total is £5,000. If you can see here, the total is £5,000. So if any of the savings income is coming in the first £5,000, then this rate will apply, which is 0%. First 5,000 is subject to 0% if it is under the savings income. So part of it was coming into the starting rate band. That's why I've written £3,000, which was coming in the starting rate band. So £3,000 into 0%, it is coming in the starting rate band. Now, how much is left? £3,000 is already taxed. The remaining amount is £3,000. So what rate will apply? Hang on, I will get some nil rate band as well. So how much will I get? I am coming in the basic rate band. So I will get £1,000 of nil rate band. So I will just write it down, nil rate band, and that will be £1,000 at the rate of 0%. So that will be 0 as well. So how much is remaining? £2,000 is remaining. So £2,000 at the rate of how much? Now I will have to pay at the rate of 20%. So that will be 20%, and it will be again £400. All right. Likewise, if I look at the dividends now we have to pay tax on the dividends as well. Now dividends, I will get £5,000 of nil rate band. Now this 4,000 is coming within the £5,000 nil rate band, so I will have to pay tax at the rate of 0%. But I will also mention, I will mention this is the nil rate band. So £4,000 multiplied by 0%. Now this dividend, although I have got the income of £4,000, whereas I am eligible to get the nil rate band of £5,000. Now my remaining nil rate band will be wasted. I cannot go into negative. It can only reduce the tax liability to 0. It cannot go into negative. So whatever I can use. I cannot go into negative. All right. So that was Mr. A, as far as Mr. A was concerned. Likewise, if you want to go ahead with the Mr. B, now I will just tell you what will happen to Mr. D, so that you can go ahead in your own time. And now Mr. B has got how much income? Hang on, let me see. Whereas his friend Mr. B has got £60,000 of employment income. So employment income, we'll just write down here, employment income of £60,000. Then he has got £16,000 of interest income. So I will go ahead and put £16,000 under the savings income. Hang on, this interest income is coming out of the loan stock of an unquoted company. Now this was received net. So what I need to do is I need to gross it up. How can I gross it up? I will take £16,000 multiplied by 100 and divided by 80. That's how I will gross it up. Then the £20,000 I will put under the savings income. And that will be my interest from the loan stock of an unquoted company. Finally, Mr. B is getting £6,000 of dividends as well. So I will go ahead and put the £6,000 under the dividends. Dividend section. All right. So how much income he has got? He's got, he's got how much? £60,000 of employment income. Then he's got £20,000 of savings. So it altogether £80 and £6,000 of, so altogether £86,000. So £86,000 he is earning. So if I total it, £86,000 is coming not in the basic rate band, it is coming in the higher rate band. All right. Now first £60,000. If I look at first £60,000, so I will deduct the personal allowance out of the £60,000. So £60,000 minus £11,000, which comes to how much? £49,000. Now that £49,000 is so up to the basic rate band, which is £32,000. We will pay at the rate of 20%. You can check your notes. It is in your notes. Up to £32,000, it is at the rate of 20% if within the basic rate band. Above that, it will be at the rate of 40%. Now the interest income of Mr. B is coming in the higher rate band, isn't it? So it is coming in the higher rate band. So what he will do is he has got interest of how much? He's got interest income of £20,000. And out of that, he will get nil rate band of £500, and £500 he will pay tax at the rate of 0% up to £500, and the remaining 19,500 he will have to pay tax at the rate of 40%, because he is higher rate taxpayer. All right. Likewise, if we get the dividends, how much dividend he is getting? He's getting dividends of £6,000. Now, although he's getting dividends of £6,000, and despite of the fact that he is higher rate taxpayer, he will still get £5,000 of nil rate band, because £5,000 of nil rate band is for everyone, regardless of even if he would have been additional rate taxpayer, he would still get £5,000 of dividends income. All right. So he will get £5,000 of nil rate band. So up to £5,000 he will have to pay tax at the rate of 0%. And the remaining £1,000 he will have to pay tax at the rate of how much? 32.5%, because he is higher rate taxpayer. All right. So after calculating all these tax liabilities, One additional thing in Mr. B's case, what we have to do is, after calculating his total tax liability, we will have to deduct the tax deducted at source. Now, in tax deducted at source, we will have to deduct the tax on the interest income, because £4,000 of tax was already deducted when we put into the pro forma. So we will reduce the tax liability with £4,000. So that this was a tax which was already deducted at source. All right. So that is the way to do it. Likewise, if you look at your example in the notes, please, on page which page is it? On page 4 of your notes, there are a couple of examples given to you. It examines the interest income and dividends income in more details, and there's a little bit more trick as well in this one, a little bit of planning point of view. I will tell you, we will do these couple of examples together as well, but in the meantime, when you finish this lecture, have a go at it and try to solve these couple of questions, examples which are given on page 4 of your lecture notes. When you try these two examples, and we will see in a couple of lectures time, we will do together as well, then you can just check it with your own answers. All right, so that's it for now, and I will see you in the next lecture, and we will continue with income tax. And if you want to note down the answers, I will just move on one side if you want to note down the answers. All right, and please, for Mr. B, please have a go at Mr. B as well. I've already told you the answer anyway, so please have a go at it and try to solve the answer. That's it for now, and I will see you in the next lecture. Thank you and goodbye.